Tutorial videos are something that I haven't done in a long time, even though I've recently had a few requests to do so. So here is a quick and intermediate level guide to options, followed by me explaining how you can take the most basic, professionally recommended approach to investing, safe, no risk, you just get your 7 to 10% returns each year on average, but in my opinion, just as easily and just as safely, you can boost that and make double or triple the standard returns each year. So first of all, the options tutorial. Today, when Intel suddenly jumped in value, my Intel call option, even though it wasn't very good, ran a lot, so I took a nice profit. The reason that the contract changed in value so much is because of the sudden spike in volatility. Volume can also do that. Like sometimes right before an earnings report, the calls and puts of a stock will go up really high in value because of all the volume coming in for earnings. Then after earnings, even if you bought a call and it went up, or even if you bought a put and it went down, you may get crushed because of the sudden drop in volume, dropping the value in contracts. And that's why they call that IV crush. So if the volatility suddenly mellows out, or if the volume suddenly drops, the calls and puts can both lose a lot of value. MU to buy a call a week out last week was pretty cheap, but MU to buy a call a week out this week is very expensive because it has earnings next week. Now moving on to the next topic, if you simply invest in index funds or blue chip stocks, you can get your 7 to 10% a year on average in growth or dividends with basically no risk at all. It's the slow, long way to do things safely. However, if you're doing that, but you also diversify a little bit into crypto, remember Bitcoin outperformed both the market and gold over the last 10 years, and if you simply look for some dips to buy, like good stocks that suddenly crash from one bad earnings report like Apple, or if you find some good stocks you believe in like AMD, back when it was $60, I called it being a $200 to $300 stock. Or Chewy, for example, crashed because of a bear market, but obviously is worth way more. Bear markets are always an amazing opportunity to buy good stocks cheap. Crypto has a lot of potential. Even Warren Buffett says great things about small cap stocks. So invest properly, but also diversify to make way more.